I'm super happy to have you guys because I've talked to you about coming on for a while. And Tom, I had you last time and it totally got screwed up, the entire thing. So I apologize. Hopefully it doesn't happen again. And Drew is like one of my, and it's not because you guys aren't just as cool, but this dude is always like, him and Brad Cuddy to me are like the coolest freaking. I told him on the way over, he's like an American version of James Bond. And then I found out it's because his dad is from England. So that made sense. It made sense to me, totally.
Is it the mustaches?
It's the mustache. It's just the carry. To me, it's just the way he carries himself.
I'm just a walking mustache.
Yeah.
That's all I got. That's all I got.
But yeah, so Drew Armstrong, Cathedra, Tom Masiero, Kungsleden. Yeah. Yes, but also kind of, which we'll talk about, Cathedra as well now at this point. So yeah, we'll get into that. And then Marty Bent of like a ton of different things that everybody knows. 1031
TFTC Cathedra. Father, husband, son, brother.
Yeah. Perfect. That's good.
Man.
Man.
I like to think.
Yeah.
Man.
Pronoun. You have to make sure you have that.
We require everyone to state their pronouns before they come on. So, but yeah, glad you guys come on. We've already had a little pre-game tinfoil hat time, but I'm sure we'll have some more pop up while we discuss.
That's
things.
for premium access.
Yes, yeah, that's
subscribers.
paid subscribers.
Yes,
that's right.
exactly.
So, you guys better pay and subscribe.
No, thank you so much for having us.
Yeah,
and yeah, it's great seeing you. I mean, we're just coming off the back of Digital Wildcatters Empower event, and it was just another great high signal conference down here in Houston. Yeah, it's just great coming down and seeing people who are, real in the industry, who are really, thinking for themselves and working on a variety of different stuff, but just not a ton of noise, which is you love to see.
Yeah, what did you guys think of the? We cut it down to like a day and a half. What do you think?
Liked it. You're not as fatigued.
Right. I'm super freaking tired, dude.
I know. I'm tired just with the time it was, but because there was more time around some of the, I would say, like networking and socializing. That's why, like, I think you're even more worn out,
right?
Because we were out till like whatever 12-1, different after parties and whatnot, but all good people, and that's really what it's about. Like, anytime during like these bear markets and then going into bull markets, all the relationships that you build during this period, like during these little events, is what forms, partnerships or new deals, or hey, I thought of you because someone mentioned your name. So yeah, and there's so much content on YouTube or whatever, but I noticed that the talks this year, usually I just ghost them because I'm like, I've heard all these people. But the talks this year were like generally pretty good. Like it was a lot less, especially panels. I feel like the people on the panels were not shilling, which is good. And there were some like good conversations around stuff and tight windows, 20 minutes. Whatever you say, you better know that whatever you're saying is going to be impactful. So don't like just start talking to talk. So
yeah, I agree. And I actually felt like, even though it was a lot shorter, I had more productive meetings with like clients or potential deal making discussions than what I normally did. Maybe it's because it was a shorter time frame. You got to get your shit done and get the meetings done. But yeah, I thought it was a lot better for like productive, like profit driven conversations and partnerships. I thought it was really good.
Yeah. And it's a good space too, because there's so much room. You don't feel like you're cramped. It's a good vibe. Yeah,
and we moved the stage front. Like we had it last year. We were up on stage, so we had that little circular one down below it.
Yeah, much better.
I thought it was a lot better. Yeah. And kind of had the seating more like semicircle almost.
Yeah,
I mean, we're getting some really technical dorky
seats
stuff.
More too, I noticed.
Yeah,
right. That's a good point.
Yeah.
First time I've seen like couches at a conference, which I thought was a great idea. But no, I think to your point, so many of these conferences, and there are so many conferences in general now these days.
It's too many.
Too many.
With
conference inflation, but then also for so many conferences, they would just want to basically try to fill sponsorships, and so it's like 3 days of panels and stuff. And how much is there really even to sort of talk about that's novel and not just selling a panel to sell a panel, something like that. So I think it's right, and also there's nothing wrong with people going through a day or two. Maybe some conversations they wish they had. Give someone a call.
Right.
It's good to kind of leave people wanting for more.
Yeah. No, I agree. I do think there's too many conferences too, though. Like, it's gotten to where you kind of regurgitating the same conversation over and over and over, to where it needs to be productive. That's what I do like about this one, is they tailor it it feels like it's tailored anyway to like the energy world and how miners fit in, and explaining it to the energy producers more than it is just a straight mining conference.
Yeah, for the listeners out there, I'm talking specifically about like Bitcoin focused conference inflation. It's crazy. That's why I like the Empower conference, because that's what we need to be doing more as Bitcoiners, is talking to tangential industries and stop talking to ourselves, which I think has become the trend over the last 5 years.
Definitely. Yeah, it has. Turns into an echo chamber.
It's the only, other than any of the micro events at Bitcoin Park in Nashville, is the only other mining
Those
event
ones are freaking
go
dope,
to.
dude. I love Bitcoin Park. Yeah, that I really like that place a lot. And Rob is super freaking cool. He's
they're all crushing.
Shout out to them.
They're all going to be. I mean, like just the gravity of what they started a couple years ago, and then like Bitcoin Nashville's coming there. It's just it's pretty awesome.
That's such a better setting too for Bitcoin conference than Miami to me. I'm sorry, any Miami people. Russell's a Miami dude. I like him. I love him, but like other than him, I'm like I don't have any desire to go to Miami, honestly.
Yeah,
especially
in the summer.
I like Miami.
I like a little mischievous. Like, what's the stories behind that?
I like to be able to, go run run on the beach, go work out at Muscle Beach, go jump in the ocean before going to a conference. I think that's a great little morning recipe.
That's not a bad one. Okay, you're making it sound way cooler.
But I mean, the other thing too is that,
and then like literally putting out a press release like while you're doing all that stuff.
Yeah, something like this. Trying to tweet it, make sure there's no typos. But no, I think it's also like, because it's Miami, it does attract a lot more noise. And it's like, look, I love the people in Bitcoin. One of the things I love most about Bitcoin. So many great people like the three of you and many others. But Miami does tend to attract the worst of the fringe crypto people, scammers. And it's like, look, I love Bitcoin people. I'm not trying to go to fucking 11 until 4 a.m. with a bunch of these like scammy crypto people. So absolutely not. So maybe that's the real benefit of moving it over to Nashville.
That's what I was probably referring to. Yeah, because it does. It's like, man, this doesn't feel like Empower. Empower's like, man, it feels like there's a bunch of oil and gas people here. They're trying to figure it out. There's a bunch of mining groups that are trying to like get their first project out of the ground or like get into the game. And then there's some of the bigger boys too, where you can kind of do some large scale stuff. But I don't ever feel that scammy like Miami vibe that I feel when at the conference sometimes. So I think it'll be way different in Nashville.
The shorter, highly focused events are what I've been trying to go to more. Like at the park. Yeah, they had these summits: mining, lightning, Noster.
What I think we need to replace some of these conferences with is like golf tournaments, paintball stuff.
Yep,
that's what I think. I think it's what we need to do.
You did one last year, right?
Yeah, at the park.
Yeah.
Oh, you did? You guys did one?
Yeah, we're doing another one this year.
Okay, I think that's way better because
oil and gas. About it, though. Like he did like some really cool like swag behind it. There was
Rod. It was at the Golf Club of Tennessee,
which is like premier.
Yeah.
We're doing it again this year, but no, it was. I think we did a scramble with 6 teams. So there was only like 24 people.
Oh, really?
It was great.
Oh yeah, okay. I do remember you guys it was like $1,000 a team or something, right?
Yeah.
Not bad.
Something like that.
Yeah.
How's your swing looking, Marty?
Pretty terrible.
Terrible.
I really want to get into golf, but I don't have time to practice.
Yeah, no, I know. I practice and I still suck, so it doesn't tend to matter. But I want to do the golf tournament this year. I'm gonna bring Sarah. She's a freaking ringer. She don't look like it maybe, but because she's like 2 feet tall, but she can freaking play some golf. I was shocked. Yeah, she beat my dad. He probably does not want me talking about this. But she beat my dad. She almost beat me the other day. I beat her by 2 strokes. I'm like, golly, this is going to be embarrassing. But awesome. So I definitely want to do that. But I think we need to do like some more like industry events where golf tournaments, paintball stuff, things like that. It's more oil and gas does a good job of that. Like we always have some big tournaments. They raise a lot of money. It's a lot of fun. You get some cool prizes and stuff. Yeah, it'd be way better than just doing conference everywhere, in my opinion.
Yeah, I am like a big proponent of stealing or borrowing like a lot of the things. It's from like a community perspective that the Energy and Oil and Gas Association do. And I think the more we were kind of talking about this on the way over, not that it's becoming more professionalized Bitcoin mining, but it's just becoming more mature.
Yeah.
So like now you've got people who've been in it for, like from a, like actually bringing home a salary, not just like mining in their basement or whatever, but have been doing it for a profession for 5, 6, 7, 8 years now. And you see all these, there's a lot of young people there. Maybe I'm saying that as like the resident
we're getting
guy,
older, Tom. Is what
there did seem like there was some like, some young whippersnappers there. And it's like, cool, man. Like you see these progressions of kids coming in at like 17 or 18 and like they can actually have a career in this. So as more and more folks come in, there will be like more events that will, I think you can mimic exactly what goes on.
I do too. Yeah. I do too. And it's like a similar type of mindset people for the most part as like the energy industry. That was I think what attracts so many of them to it as well. But we probably I want to talk about all your guys' stuff that you guys all got going on. Big one obviously is your guys' merger with Cathedra again. Yeah. Which I know you guys like. When I talk to you, you're like, yeah, it's been really tough, and I'm like, dude, you guys all know each other, and you've known each other for a long time. It's got to be a pretty easy negotiation for the most part, right?
Oh yeah. I mean, like negotiation wise, like I think that's that's all part of knowing who you're working with. So that aspect's probably like the most least stressful out of all of it. It's just the things that you can't control. The time resources of like once you commit to something like this, it kind of puts a lot of like, especially when you're a private company, you just want to continue to grow your business and like, you don't have any shackles. But once you commit to doing something like this, you basically have to put everything like on pause and get all of the necessary things and multiple lawyer firms and all working together, and you just got to be patient with the whole process. And it was good. I'm glad we started when we did, and I think we're it's gonna be a good time.
Yeah,
it's gonna be a good time. We got to get working. That's really it is. That's all we want to do is keep building. So,
and I haven't even got to say it, but I'm actually I was super happy because I was like, oh shit, great, T-Tech's out here. That's Tom's group, because I'm at Adicon now, and that's where you guys site, one of your sites. Yep. And so I got over here and I was like, oh, I didn't realize Tom's group on there. And then literally like I don't know, a month later they're like, oh yeah, so there's a merger between Cathedra and T-Tech. I was like, oh shit, this is great. Get my boy Drew back over here, and I get to work with you guys. I'm super stoked about it.
No, I think it's one of the things I personally find, and I can speak for AJ too, we find most exciting about this is, we've known Tom for years now. And to your point around this industry kind of maturing, there are some people's reputations now really, I think are really important when, with who you work with. And as we all know that there are many such cases of scammers in this industry, or even just people who maybe like overpromise and underdeliver. And so it's just nice to work with people that are good people who have, and we love the business that Tom built, and we're so excited to, join forces here because, I think so much of this industry is about people, because you see people with a ton of capital who still make horrible mistakes, and that really like sets them far back. And so that wisdom and that intuition for, what's coming down the pike is so important. And so, it's great to be, I think post this merger or pro forma for the merger, we're really, really excited about not only the business where it will be, but also our ability to grow, expand beyond that, whether that's a US listing, but also just expanding operations, getting into more business lines. Because as we look around at a lot of the other Bitcoin miners right now, they seem to all be playing the same game where they're caught on the ASIC hamster wheel, where, you're a pubco, you raise as much equity as you can to buy ASICs, but also sometimes you can't really raise that equity until the bull market. And so you basically are raising equity in the bull market to buy ASICs
at the high,
riding the value all the way down. And, you're engaged in just this like perfectly competitive commodity production where anyone anywhere in the world can run an ASIC. And one of the things that's most attractive, I think, about our business, once we, close this merger in the next few months, is the ability to have like, a hosting business paired with prop mining exposure, where we can, put on a trade and buy ASICs, or if we want to increase our exposure to hash rate and hash price, we can put on a trade, but we're not just dependent on growing hash rate for the sake of growing hash rate.
Yeah. Okay. So can you guys explain what did you guys bring to the table? I know a lot of this stuff, but for explaining to people like T-Tech, where are your guys' operations that you can talk about or that you will talk about?
Yeah.
And the size and all that. And then Cathedra, what you guys had going on and where you kind of, what was attractive for you guys to merge with them? And also kind of, I don't know, maybe tell the past, because you were at Cathedra previously, right?
Short stint.
Yeah. And then left and started the private stuff. You guys you're doing a lot of the private stuff too with Tom, right?
Yep.
Yeah. So how do you guys kind of start from there and tell that story, where it was at, like when you guys left Cathedra the first time, and then what you guys were doing, and then what brought you back together?
Yeah. So if you rewind back to like end of 21, there was kind of an exodus out of Great American Mining. I think like we discussed before, and right at the top of the tippity top of the bull market of 21. So
can you believe it's already been that long though too? I can't believe
3
it's
years.
like,
it's pretty crazy. Going on 3 years. So so that happened. And then like during that time, like Marty and I started doing like this off-grid thing together. We bought some hash huts from Steve. I have some oil and gas, like small places where we just do like our own little thing. And so I was tinkering around with like doing stuff, and then went to work with Cathedra. A bunch of the GAM guys went over there, and like we were loading up for bull. Like these guys had made like a really good equity round prior to that, or convertible debt round. They ordered a bunch of ASICs. Everything was lining up, and then the market just started sliding. And it wasn't like a quick slide either. It was kind of like, oh, maybe it's going to correct and go back up. So you couldn't really prepare for it to like go down. And then, early spring, it was kind of, or late spring, it was kind of clear what was really happening. Difficulty shooting up because everyone's plugging in those ASICs that they had on futures orders. And then, the kind of the bottom fell out of the market. So for me, I was like, oh no, like my priorities had to shift, because it was like we had this idea that we were going to expand and do a bunch of off-grid stuff, and it was like, well, we can't do that. It's too much capex, because oil had risen and natural gas had risen at that time. There was no cheap generation available, so we had to kind of pivot, which you have to be very nimble in Bitcoin mining. And so then it was just like, okay, we need to find some stable on-grid places we can plug these machines in. And we found one partner, got them in, and then we had some staggered machine orders throughout the rest of the year. And then that was just my job, was try to find as many homes as I could. And then it was just like, okay, well, it's pretty clear that a lot of the public miners, we're gonna have to just make sure that they can stay alive,
right? And
like that's honestly, it's the hardest part about running a Bitcoin mining business, is staying alive.
Oh yeah,
it's so easy when things are like So and then at that point, I'm like, okay, well, I've got this little bit of operational experience that we've done with this off grid. There was an opportunity to partner with my partner right now, Gavin, on doing an on grid site. So I kind of took that on as like hey, let's try to do this. Like I've never built anything like that before. And we did, and kind of turned it into a business like during that time. And it was like just perfect, because like you're at $15,000 Bitcoin. So you're literally the top 67,000 or whatever. November, December of 21. And then come July, August of 2022, you're like $15,000 Bitcoin.
Right.
So, I mean, it was a pretty dramatic drop. Everyone's like, whoa, what are we all doing here? And then, I start building a site, because there's a lot of cheap infrastructure that's there. Right. And it's not intuitive to actually build something like that during then, because you're like, what? How are you going to do that? Because
but it is the right thing to do.
It is, but it's not like, it doesn't feel like the right thing to do. Right. Like you want to ape into buying Bitcoin when like it's tanking. It's like almost impossible to do.
It is. Yeah, unless you're really hard.
But like it's a similar way with building stuff. So we just started building like co-location hosting sites, and I was so risk adverse to having exposure to ASICs that I was just like, I was almost like allergic to it. I was like, I don't want to touch ASICs. I just want to build these sites, have this nice little, stable income that comes in from them, and be able to have a pretty quick payback schedule. And, it wasn't sexy. It was just, you start building sites. They were easy to do during that period. And then, nature starts to heal itself,
right.
Like the markets start to heal. You see where things are going. And then, the ETF and, whatever, last spring when it kind of
the banks, to me, that was when I felt like things started solidifying a little bit behind a messaging of Bitcoin, more for like average people that they could start understanding. But yeah, I felt like that was actually, even though that was a while ago, that was about a year ago.
Yeah, like SVB and everything.
Right.
Absolutely. Yeah. That was right around the same period.
Yeah. But I felt like that was actually a kind of a turning point for me anyway. Like,
no, it's the first time that most Americans, our age or even older, have ever thought maybe I can't trust the bank just holding my money.
Right. Yeah. And it was explained in a way of like, oh shit, okay, I kind of get that. You know what I mean? So what do you think about that? Because Marty, obviously everybody listens to you and your status here. I was with your history on it too, which by the way, I just found out like your kind of journey into Bitcoin from reading Parker's book. Mm-hmm. So I read the foreword and I was like, oh man, he's way younger than me too. You mentioned like being 17 years old in 2008. I'm like, good Lord, I was old as shit already. So yeah, but what's your thoughts on kind of, I guess, from the bank? And I know we're jumping around. We'll go back to the computer stuff, but from the banking crisis that we had, the little mini one back last year to now, like, where are we going? What changed, like, since then that would prevent some of that stuff from happening before? I haven't seen anything.
Nothing's changed. It's going to happen again at some point. But I think there's two things I would take out of those particular events from last year. One is the way in which it happened highlights that bank runs in the social media age are completely different than anything that's existed historically. If you go back to the Great Depression or even 2008, like the speed at which news spreads today. Peter Thiel sends an email to founder fund companies, and then that email leaks, and then eventually there's tweets going out like, we're running Silicon Valley Bank now, and within 48 hours the FDIC needs to step in.
Jason Calacanis is crying on
yeah. He's always crying.
Yeah, it's true.
But why was he crying? Because he was like, we have a bunch, not only the venture funds have exposure, all of our companies have exposure. All the founders of the companies that are doing well have leveraged up their equity in their companies to get mortgages. Like, this is a cataclysmic event for Silicon Valley. And the big meme that came out particularly was like, these companies are not going to be able to make payroll. That's what Jason was crying about. It's like, if you don't save this bank, you're not going to be able to make payroll. It was interesting from my perspective, particularly at 1031. I think the Bitcoin industry was felt this acutely because it's hard for Bitcoin companies to get bank accounts in the first place. And a few of the banks that you were able to get bank accounts were Silicon Valley Bank, First Republic, Signature, Silvergate, and all of them ran into trouble. And so during that period at 1031, we were on calls nonstop with portfolio companies, helping them scatter to spin up bank accounts at multiple banks. And that's like one of the trends we've seen since this time last year, was that many companies have many bank accounts where they hold money below the FDIC insurance level.
Oh, really?
But another thing we saw was like companies like weren't waiting to set up a bank account. They were literally buying Bitcoin and sending it to wallets that they controlled, like that they could get wires out of the banks that were failing. They were buying Bitcoin and then holding that Bitcoin on their balance sheet. So if the Fed and the FDIC and the government didn't step in, they would be able to make payroll in Bitcoin. Right. So like, not only to highlight the fragility of the banking sector, but it highlighted the importance of the peer-to-peer censorship resistant aspect of Bitcoin, where you can control your wealth. And I think whether it's recognized or not yet more broadly in the market, I do think even companies outside of Bitcoin that were exposed to Silicon Valley Bank specifically recognize like, oh shit, this is why Bitcoin exists. Like if I can hold it in a multi-sig and actually have access to my money whenever I want, I don't run into these problems.
Right.
Yeah. It's almost like one of those things where, I don't know, that old Chinese proverb. I'm sure you know it, Drew. Yeah, of course you do. But like the farmer who has like bad shit happen, and the neighbors all come like, oh man, we're so sorry for what happened. And he's like, no, we'll see. And then something good came from that. And then they're like, oh, it's so wonderful that it happened. And he's like, we'll see. And then some bad stuff happens from it. That to me is one of those situations where it was like, for a lot of people, oh, this is horrible. And it's like, this might actually be a wake-up call to more of the general population to realize why we need Bitcoin and why we need like a peer-to-peer system than what we probably might have thought right off the bat. But I've looked at it like this. That to me has been kind of the moment that stuck out, where I'm like, I feel a shift, and it's just a freaking... This is like a cosmic universe kind of shift thing for me. That I'm like,
energy change.
It's an energy change.
Yeah.
So Yeah, I agree. But
I mean, Bitcoin has a way of teaching lessons. You know what I mean? Like through different cycles, there's different lessons. So like right now, that lesson that happened last spring, well, what's happening now on the treasury side? You're seeing Saylor conduct a master class.
yeah,
and so like now there's an entirely different, I mean, like obviously he's doing it a little bit differently, but you know, from like a treasury management standpoint, that's like one extra layer. So now the folks who have gotten themselves out of trouble, you know, now they can see like, well, wait a minute, what should we be putting like our, you know, reserves in? And you know, before they thought, oh, Sailor's kind of a novelty or whatever, but now it's like, no, this dude made it through like the grinder,
right,
and now he's like ready to take off.
right.
So you know, now there's going to probably be a lot more. In fact, we know of, you know, some private tech companies who have like a good amount of their treasuries in Bitcoin.
Really?
They continue to stack into Bitcoin. Yeah, and they have obviously no incentive to make that stuff public,
Right,
but
right.
it's very, it makes it very much a resilient type ecosystem.
How are they handling that on the accounting side? Is it any issues for any of them? Are they
well now with what is
the FASB?
Yeah, with FASB, it makes it a lot easier.
Does it?
And the accountants are getting better. Like I accept Bitcoin and have a lot of revenue in Bitcoin for TFTC, and there's accountants out there you can hand them a CSV with your transactions, and they're able to handle it. Just mark it as income and hook up your exchange, and the exchange does a good job of tracking if you bought and sold, when you did, and
so it's manageable now. A lot better.
And also, I mean, related to this, something Steve Barber's been talking about for years too, or really what his whole business model's been for years. How it's just like a good manufacturing business that just stacks its retained earnings in Bitcoin. You know, again, don't need to buy an ASIC, which I think is going to be a theme here in this conversation. Like I think there's as more and more people are waking up to Bitcoin, you're just going to see more and more small family businesses, maybe not even, you know, sexy tech companies, just keeping some of their retained earnings in Bitcoin.
Yeah, good. I like it. You know what else has changed, at least for me even too, is like, and you kind of touched on it, where it's like, it's hard to go ape into Bitcoin when it's like tanking. That's true. Like it is. And I think too often there's people, because nobody ever wants to disappoint Marty. You know what I mean? They all want to impress you.
Just got to keep stacking those sats.
Right.
Yeah, yes.
But it's like a lot of people that they start seeing it tank, and it's, you know, they start sweating it because, you know, it makes you nervous.
I mean, I still remember, being glued to Telegram in March 2020 as Bitcoin, you know, the BitMEX liquidation sent Bitcoin down to 3,500 for a hot second.
I remember that day. I was in Belize and I was super wasted, and I was like, I can sell a bunch right now and buy it back cheaper. And then I passed out and didn't wake up until the morning, and it went back up to like 7,000.
Yep. No,
I was so pissed. I basically got back in for what I had left, but it was.
But I think that's also like, unfortunately, to this broader point around treasury management, this is sort of the new paradigm we live in too, where it's like, all right, you know, you have sort of this like ticking time bomb with fiat, or the melting ice cube, as Saylor might say. How do you actually store your wealth? And I think we're talking about the regional banking crisis. I think that's going to go down as, you know, a very important sort of piece in this. So will the U.S. freezing Russia's FX reserves, as like these treasuries. You know, we've told the whole world that these are basically money, and these are collateral.
It's risk free.
But with the risk-free rate, but also we can tell you that they're not yours anymore if you do something we don't like. And so I think this is now, you know, it's something Arthur Hayes has written about, where will sovereigns start maybe storing some of their current account surplus in commodities like oil, gold, Bitcoin, like potentially. But we're just sort of in this paradigm shift right now where the landscape is shifting below our feet.
And they've screwed the treasury market in two ways. Number one, by freezing assets of a sovereign nation, and number two, like, look at how much debt we're printing right now. It's like I wrote a newsletter about this on Monday. We're issuing as much debt as we did in March of 2020, April 2020.
Are you serious? And we don't have a pandemic going on.
We don't have a pandemic. We haven't stopped the economy, but we're printing as much debt. And I don't know, this isn't really well known either, but they literally manipulated Basel III leverage ratio requirements a few weeks ago and took treasuries out of the leverage ratio calculation. Essentially,
I don't know what that means, Marty.
Basically, long story short, it's a desperate move by the Treasury and the federal government to drive demand for treasuries from the commercial banks.
Okay.
Yeah.
And so by taking it out of the leverage ratio, it's not calculated in that ratio.
What that looks
and
like.
So it allows banks to buy more.
Oh, wow.
And so they're trying to create demand for treasuries. But then you think about what happened last year, why did all these banks fail? It's because they had treasuries as their liquid reserves, and as people were pulling money out, they had to sell those treasuries at a loss. And
so they're not doing anything different.
No, they've exacerbated the problem. They're printing more treasuries and just adding to the problem. So the banking system's extremely fragile right now.
And then on top of all of this, you have this crazy geopolitical shift that's happening where we're moving into what is commonly referred to from a unipolar world with the US just running everything to being in a multipolar world. And there's this like, decoupling with like BRICS that's happening. And so like Bitcoin plays a weird spot in this because like they're, you see these two like big bullies that are like going to be going at each other. And then Bitcoin's just like, that's why I always use the term like Bitcoin's Amish, meaning like it's like doesn't want to, it's completely voluntary. It will operate in like a parallel way to like regular society, but it'll just kind of keep tracking. So like what's like unique about it is Bitcoin can permeate and proliferate in both a BRICS world as well as like in our world.
Right.
And because they're going to be so focused on each other, it's like this thing gets to grow bigger. And I almost feel like that's what's happening with the ETFs right now, and which is wild because like the sentiment prior to the ETF announcement, which was the banks having that whole deal, like pretty much like a couple months before that, it turned it into like almost like an avalanche.
Yeah.
So
yeah, and I see the numbers like the demand from the ETFs is like outstripping daily production by like 8 times or whatever. I mean, that's it's not a fair comparison. I understand, but if you look at any other commodity that had that type of metric, well, it would the value. Could you imagine oil with a deficiency on production of 8 times what the demand is?
Well, that's part of the beauty of Bitcoin that people really we have debated on this many times. Like I think things are going to get weird because you have the whole treasury good weird for us, but for other people maybe not so good. But the treasury situation, it's getting bad. I think we're in a runaway like debt spiral right now that we're in the middle of. People just don't realize it yet. But like you just mentioned, Bitcoin's supply is not elastic. It's completely inelastic. And so like as going back to the social media age and the bank runs, like it works the other way for Bitcoin as well, where you see the ETFs buying, you see sovereign nation step in. Like one of the Middle Eastern countries is like, oh, we're putting a portion of our sovereign wealth fund into Bitcoin. And then the rest of those countries are like, all right, if they're doing it, we're doing it. And you have the halving coming up, and there's not a lot of free float Bitcoin on the market right now. You could see price run pretty insanely. It can get crazy.
Which is weird because I thought before the ETF stuff, so like last year, I'd think about it and I'm like, we don't know how it's going to react after the halving this time. You can't just automatically assume it's going to be the same, yada, yada. But now I'm like, man, the demand is clearly there. We really have no retail driven. This isn't retail driven.
Yeah.
No. And so that's where I'm like, we just could get really interesting.
Not a ton of like institutional like bullness either. So it's just kind of happening organically. And then like if you want to like just zoom out, it's like, okay, well, how does this affect Bitcoin miners? And we were talking about this earlier. It's like, well, you could very easily see 150K Bitcoin here in the next like month or two. And for a Bitcoin miner, life will literally be the same today as it will be then.
Yeah.
So I know that's kind of like, oh, that's quite a black pill, but like right now, like you can build a good business.
Right.
Like why would we only want to have these like, like I think the bull markets are like poison because you only have like 5 months of profit and then it's just pure, like you can't even play it right. A lot of times coming down, you almost have to like sell out and just wait for it to crash and then buy everybody else's stuff. So this time around, it's like, well, maybe the market will think it's frothy, but to the miners, they're going to be having like a successful business or at least be able to keep their lights on. And it'll be really interesting to see how it impacts like all facets of the like Bitcoin mining like ecosystem, whether it's like miner sales, rack space, new models being released, hash rate. There's just like a lot of downstream effects from it.
Yeah. And I think it also creates a better floor. You know what I mean? I like you're in a commodity, right? It's going to have booms and busts. But where we have a 80 to 85% bust, I think with the ETF, I think that does help kind of raise your floor. on what those busts will be. I'd be surprised if we see like 80% busts again.
Well, it could be. I think there's just like mechanistically, it could be that if there's a ton of sell pressure on the ETFs, then you basically have some forced sellers of Bitcoin hitting the market. So I think it can go both ways. It'll be really interesting to see how it does. But certainly within mining, and I think this kind of ties us back into sort of the kind of like the broader like merger story and like merger conversation. You know, I think.
Yes, thank you for bringing.
Yeah, I know. But I think so. You know, I think Tom did maybe just to kind of pick up the story where you left off a little bit. Yeah. You know, I think Tom, because kind of I'm getting to kind of exactly this question where we're talking about now more broadly about capital allocation, and especially not only capital allocation as a business, but capital allocation if you're working in Bitcoin mining and how you should be thinking about where you're deploying capital because the opportunity cost is behind Bitcoin. So I think Tom outlined, 2022, how that all, played out almost perfectly. As AJ and I joined late 2021, we tried to, raise a bunch of capital to buy a bunch of machines. We thought there was still some juice left in the bull market. We knew Bitcoin mining was a scale game. We were very focused on going after the off-grid opportunity. And that's why, we hired a team. I moved up to northern New Hampshire to start trying to make some modular data centers because the lead times on buying any from any suppliers were crazy. Yep. We wanted to be able to control our destiny, wanted to go, plug in Bitcoin mining machines off-grid. But because of the European energy crisis, the cost of gensets skyrocketing from leasing for 3 cents a kilowatt hour to $7. The capex of buying gens still hasn't really come down to a very competitive level. And Tom is exactly right about how we sort of just had to pivot because even though we had sort of set the North Star, your business, you need to produce cash flow. And it was by far better for us to, plug them into the sites that Tom found. And then around the time, Tom and Cathedra parted ways, Tom basically built the first site for what is now Kungsleden, and we hosted some machines there too, and they were running great. And really over the subsequent year, through the FTX collapse, hash price getting down to $55 a petahash, which is lower than I certainly thought it would go. We started having to get real desperate using things like experimental firmware to underclock machines and boost efficiency. Just to, again, like at the end of the day, you're a fiduciary. And you need to produce cash flow.
Creative is a better word than desperate.
No, but I think you're right. It's very creative, but desperation.
Creatively desperate.
Yes, desperation can breed creativity. But no, and so thinking like reflecting on that experience, and we've had many conversations about this. I think it shed some light on the reality of Bitcoin mining, right? Which is, ASICs are very volatile. They're always priced depending on the margin you can get if you plugged it in that day. Right. So the price immediately responds to the economics. It's not like a cost plus type, purchase. On top of that, anyone around the world can plug in a machine. There's no permit you need to plug in a Bitcoin, an ASIC. And many of them don't, for some reason they have either extra economic incentives or they're able to sort of subsidize their cost of electricity. Maybe it's, a government mining Bitcoin, stealing power from the private sector, which does happen in the world and in many places, or people stealing electricity through other means. So no one's stopping anyone from plugging in machines, which makes it just very competitive commodity production. And then you layer in the difficulty adjustment, you layer in halvings, and it's just very hard to basically earn a positive return on Bitcoin invested when you're buying ASICs. Now it is possible, but it's just a very, very hard business. And
it's definitely really hard to forecast what it will be.
Right.
Yes.
Like, if you just keep them plugged in for as long as you possibly can, there's a good chance like it'll be good, but like there's no way to actually really accurately forecast profitability.
Totally. And maybe you can say, hey, I think, maybe Bitcoin operates in 4-year cycles. Again, like that seems to be true, but like, I don't know if I can, hang my hat on that and basically, bet
when
a business
on that. When you take that
in
to try to raise money off of it, they're like, wait, you want me to build in some price appreciation? It's tough.
And so it's because of that, it's a very tricky business. And then of course you're competing with, if you have a large pubco with the ability to raise a ton of equity financing, and some of the largest who, attended the conference. And I think, a lot of smart, great people that work there, but they're literally paid to increase hash rate and not necessarily, produce the best IRR for the business, but to grow so that they can tell the market that they've grown and investors really like that. And so there's just so much that, so much dawned on us, through that bear and coming into 2023, Basically I mentioned this concept, the ASIC hamster wheel, where so many miners, wait to raise money in the bull market. They buy ASICs, they watch a value ride down, and then, next cycle, they do the same thing again. It's like, how can you get off that? How can you actually build a differentiated business? And as we think about like the world, like where do we think the world's going? And this sort of, Tom, we've like stayed in touch. It's even after we left Cathedra, we'd stay in touch in chat periodically. And going back to I think the original question you asked about the transaction, what does each party bring to the table? Cathedra brings some proprietary mining operations. We bring a team. We bring a public vehicle. The proprietary mining operations only around 400 petahash across 10 megawatts. Basically 3 megawatts of that over at Tom's first site. And then Tom the Kungsleden business brings 90 megawatts under management, 45 that owned. And so the pro forma company will have 4.8 exahash under management. And, Tom's whole business is fixed margin. So that even no matter what's happening with difficulty and every other miner and their mother plugging in ASICs, it's the same margin each month. You can stack Bitcoin with that. You can do a variety of other interesting things. And so now the pro forma business has the ability to produce this stable cash flows, to not be engaged in just, pure play Bitcoin mining, which is quite ruthless commodity production. And as we think about the future, what are some of the things that we believe? And jump in if you guys disagree with me on this, Tom and Marty, but like we have, we believe in Bitcoin. We believe that Bitcoin adoption is going to increase and its importance in the world is going to increase. We believe in the importance of power and the fundamental, profundity of energy as a resource, and how it's the most fundamental resource, whether that's for, life, human life, obviously electricity. But then we also believe there will be more compute, whether that's compute for Bitcoin mining, potentially for artificial intelligence or other forms. And also that, as Tom was talking about today in his panel, how much that whole industry and that market segment is changing. And we haven't even begun to really see in practice a lot of these synergies that could happen maybe between Bitcoin mining and other types of data centers. And so I think when you're in that mindset, and I'm just going to steal Tom's meme here just for a sec, but you kind of realize that maybe rack space is far more important than ASICs. And it's like the access to the power that might someday become scarce, and the ability to marshal that energy, have rights to that energy, and deploy or facilitate the deployment of compute. That really is going to be the super valuable thing over these next 10 years, not necessarily buying an S21 a couple months before they put out the S23.
Right.
So that was a huge rant, but
no, you're right though too, because I didn't understand the valuations on the public miners back like 21, 22. It was just kind of absurd. It seemed like, and it did seem like there was just a bunch of purchases of ASICs. My whole question all the time was like, where are you going to plug them in? You have to be able to plug them in somewhere. And rack space.
I mean, it's like the Joe Dillon quote from last night. He's like, some elaborate question. He's just like, I'm long rack space.
Right.
It's just like, oh, it's such a great way to put it.
Right.
And everyone that kind of knows how difficult it is to get machines on, like plugged in, they would all defer to that, now. Whereas I think before it was very much like, oh, I need to get as, give me the precious. The precious during the last cycle was as many ASICs as you could get. And I don't necessarily, obviously the pendulum will tip at some point, but I think because of like this new, I don't know, era that we're in with Bitcoin, I think it's going to be different.
Yeah.
I think it's a combination of many things. Like you mentioned last cycle, these public mining valuations were arguably insane. And it's probably because retail and institutional investors that wanted to access proxy exposure to Bitcoin via equity markets, they were the only products on the market that they could access. I mean, obviously, MicroStrategy came in 2021, but that was still early and it was risky to do. But now we have,
and I don't think they understood it.
No, we have the mining codes, we have MicroStrategy, now we have the ETFs, and so in terms of public mining valuations being driven by people who want proxy exposure to Bitcoin, like that is less pronounced this time around because there's more options.
So out of all those three different groups that you mentioned, if you want proxy exposure to Bitcoin, which ones do the best?
MicroStrategy. 22%,
Okay.
8%.
Which is so funny because I was so wrong about this 2 months ago. I was like, MicroStrategy's toast post ETF, mining stocks are
Fred Krueger just
we can build real businesses.
Put a hive
and
virus
just
in
like,
you.
oh wait, no, mining stock down bad, Bitcoin up, and then MicroStrategy way up. But yeah, sorry.
No.
But MicroStrategy is performing the best.
Right.
ETFs track the closest. The miners, I think, because of the historical trend of like, oh, if we just buy more ASICs, our stock price goes up. People that are stuck on that hamster wheel, I think they're going to learn a hard lesson.
Right.
This is something, the discussions we've all been having over the last couple of years. And I mean, even at GAM, we were talking about this.
Right.
Is the future of Bitcoin mining is vertical integration and other revenue streams. And I think now where we are in 2024 with the ETFs, with the MicroStrategies and others that will come to market, the mining stocks don't have the luxury of just buying ASICs and having that pump their valuations. Like the market is going to demand that they have good IRR on their capital that's deployed and that they have like growth stories and sustainable revenue that I think will be produced from multiple streams as it becomes more competitive.
Do you think the rise in AI will slow down the difficulty increases? Because a lot of that does come from big miners making big purchases of new machines, dropping and putting it all into 200 megawatt projects. But do you think the AI kind of expansion will take a chunk out of that?
I think they have the ability to pay more for interconnects. So large projects, absolutely. I mean, you basically saw that in Pennsylvania with the TeraWulf deal there.
We just had them on like 2 days ago.
Yeah. So I mean, right there, that's a situation where two distinct natural buyers of that power, you can see where they valued it the way they did. So yeah, I think that'll be the case. There'll be some competition on that end, but it takes them a really long time to spin up infrastructure for it.
And it's super capital intensive.
Yeah, totally. I also think that like going on to like the ASIC hamster wheel, back to that, I actually look at, if you look at the pure proxy to Bitcoin and why MicroStrategy's doing the best right now is because they are essentially the best asset light Bitcoin miner.
Man, Tom's so freaking smart.
I know, but
I
mean, it's like,
that's a bar.
Well, no. But like, I mean, you got to push back on it, but I mean, like in reality, that's what they're doing. And like, I think like as Bitcoin mining companies mature, like we still want to hold a lot of Bitcoin on our balance sheet, but we want to be able to do it in a way that's completely sustainable and allows us to continue to grow. And like, I think the current models of prop mining do not, I mean, dude, you've always been quiet about this. Like, you're like, I'm going to lose my Bitcoin, mining maxi card if I tell them what I really feel about prop mining. But like, you had to pay some of like the really hard prices of like just making the decisions that all prop miners make. And I think there's just another way. And like MicroStrategy kind of proves it. They mine Bitcoin. Like, was it that gold company announced that they're going to buy Bitcoin?
That's the Long Island blockchain of this cycle. I don't think
well,
their CEO resigned yesterday.
Well,
and said it was a pump and dump.
Oh, okay, all right.
Wait, I don't know this story. What happened?
There was something that came. It was like a press release or whatever. But that being said, like I could see more companies playing that model. MicroStrategies is much more sophisticated because they've got it's just like intertwined with how they are playing the public markets right now. But I still think like you could have a very successful, like for example, tech companies. If you're just raking in SaaS money every month, like you could literally just turn that, like you'd be mining Bitcoin with it. And I think you're going to just see more and more of that. And I think the reason why Bitcoin mining stocks have not performed as well, is my theory, to everyone else, is because they're not the best true proxy to Bitcoin anymore. Because yes, they produce it with these machines and hash rate and megawatts and all this other stuff, but like how much do they actually can they keep?
Right.
And then how is that sustainable moving in the future? And unfortunately, because they're on that ASIC hamster wheel, they can't really think about that. They can only think about, I just have to grow and compete against everyone else that I'm in the same category with. So they end up becoming like an entirely new category that isn't connected to what originally was like the main driver for why someone would want to, I think, invest in a public mining stock. So it'll be interesting. And you can tell some of the companies are trying to like come up with different narratives and stories and whatnot. And I think people are trying to, kind of find their footing with it, but yeah, we'll see.
I mean, to your point though, Tom, and maybe just to summarize the view of mine that you alluded to, pure play Bitcoin mining is a shitty business. It's a shitty business. It's a shitty business because anyone anywhere in the world can plug in an ASIC, and you're dealing with all kinds of other incentives outside of that. And there's a question that Tom asked on our sort of company. It wasn't Slack, but company Slack, effectively about nearly 2 years ago now, which was, how do you mine Bitcoin without ever having to buy an ASIC? And that's one of these prescient comments that sort of lives rent free in my mind. But as we think about like what some of these other miners are doing, I think there's some other reasons beyond the fact that, pure play Bitcoin mining, I do believe it is a shitty business because it is just ruthlessly competitive commodity production. But there's some other aspects too that I think are leading to the underperformance, which is a lot of them are just trying to run the winning playbook from the last cycle, which was what Mara and Riot were doing with their ATMs in 2019, 2020, 2021. Everyone's like, that's the recipe. Hash rate growth, use the ATM. And if you're funding it all through futures orders, you maybe don't even need to finance it all right now. And so much of the investor community now, I think, is still a little immature. And they see, new headline hash rate number go up, this should go up. They aren't really thinking about dilution. They aren't thinking about how this is being financed, how this is being, funded. It seems like a lot of miners right now too are maybe raising equity to just like pay OPEX and CAPEX. So they're basically just like, we want to hold as much Bitcoin as possible. We're going to dilute our shareholders just to avoid having to sell any. And then there's another aspect, which is now there are, how many, 20 publicly traded mining companies, something on that order of magnitude. I'm no longer in my equity analyst days back like I was at Galaxy, so I could be off there, but I think last cycle there were only a few games in town. You had your Mara, you had your Riot, you had Bitfarms, Hive, but the last cycle we saw so many new pubcos come out, and so now there's not really strong momentum. Maybe some of them have really strong momentum, and they've credit to them for generating that. There's just so many options now, and you have a whole community of retail mining investors on Twitter who are like, which one's the best one to buy? What are the different metrics I care about? And again, it comes down to like, you see all these people playing a game, and you also question the long-term viability of this game that they're playing, especially if we're all as bullish on Bitcoin and Bitcoin mining as I think we are, thinking that energy companies eventually are going to be mining Bitcoin too. That game looks increasingly foolish.
Right.
And so it's like, all right, the only winning move is not to play and to go do something different where you can build a data center that will produce the same margin regardless of the next difficulty adjustment and regardless of a halving.
So that I'm glad you brought that up again. How's that working? What are you hedging with Luxor or something? How are you locking in your margins?
It's just a hosting business.
Oh, you're okay. So you're just hosting.
Yeah, we have pretty much a fixed PPA.
Right.
We have a fixed margin on our hosting customer. And obviously the key to any type of hosting kind of business is counterparty risk is the most important. Right. So the two most important things would be what type of ASICs are running, because that's kind of like your first order of like an attack vector or not attack vector, a risk, and then who's holding it, kind of behind the scenes. And so I think we have I wouldn't say a secret sauce, but like we have a really, really good counterparty.
Right.
And we use, and for the most part, we get the most like advanced machines before anyone else gets them. And so therefore they're able to withstand the deepest market corrections possible. And they're not going to, would be in a position to turn off. So for them, they want to buy ASICs and they don't want to build, they don't want to build their own rack space. Right. They don't want to deal with it. So we provide that service for them. And then it's our job to not get greedy and say, ooh, especially in a bull market. Yeah. That's what happened to Core. That's what it happened to 3 or 4 different, like,
trying to make our margins crazy at this point.
Right. Because they're like, wait a minute, we own all this rack space. Yeah. Why don't we buy machines and plug them in? And like, it's very alluring. So I think like there's lessons to be learned from last cycle. Not to say that there's never a time to get ASIC exposure. Right. There are right times to get ASIC exposure. Yeah. And I think if you're not married like ideologically to a specific way to mine, you can almost treat it like you mentioned a trade earlier. You can almost treat it like a trade because like, oh, maybe I'll buy some hash rate that's plugged in at our site. And then we know there's a new shipment coming in for the, the party that we host for. And we know we'll move that stuff out and they'll have their new stuff come in. And then maybe for 6 months, we might only have hash rate. Like we'll at least have or the idea is to have that type of optionality as a miner. And,
Yeah. And maybe just, I think one just critical point there too about some of the risks, because I think one of the key risks people may think about with hosting is like you're taking on all the Bitcoin mining risk, but you aren't even getting the upside. So I think one thing that sort of is incorrect about that is the belief is sort of if Bitcoin mining economics really tank, for whatever reason, maybe even these latest generation machines won't be viable at whatever the hash price is and whatever the hosting rate is. But then if your customer basically says, hey, look, I'm losing money, like I want to unplug these, you can just, it's fine. Okay, we'll just redirect the hash rate to our pool. And now that margin, say, if you're hosting at $75 a megawatt hour, but your power is $50 a megawatt hour, you now have jumped $25 per megawatt hour lower on the cost curve. And so I think there's like a natural hedge in place there. But as you said, many of the biggest hosts this last cycle, whether it's them getting too greedy and thinking the market's going to give me value or the market's going to ascribe value to me if I'm have a lot of prop hash rate. Maybe I'll take on a bunch of debt to go buy a bunch of machines for myself. Or even there a lot of the hosts, one in particular, just took on too much debt, got turned over, upside down because they were selling power at a fixed rate, and then the floating cost of power that they hadn't hedged themselves was way higher. Shit happens, but I think in general, when your cost of power is fixed and your margin's fixed, and your customers using like latest gen machines, some of the big risks are taken care of.
Right.
Well, the other really important risk is the initial capital outlay, and so being able to build out this infrastructure cheaply, get a quick payback, which gives you more flexibility on the financing of future projects, where if you're cash flowing and your site's paid back, you can make the decision of, all right, am I going to roll some of this cash flow into the next site? Am I going to take on debt? Am I going to issue equity? It gives you much more flexibility from that aspect as well, which I think is very important. We've learned many lessons on many good lessons, hard lessons nonetheless on financing these operations.
Yeah,
man, I'm in the process right now of getting like a 5 megawatt site, and I'm super fired up. But I need to, when we're done, I need to get some. I'm gonna be bothering you all a lot because I want to take advantage of your learnings, so I don't have to have the same mistakes. But okay, so shifting a little bit with 1031, what are they doing now? What are you guys doing as far as looking at how to kind of attack the next cycle here and investment? Like, what are you looking for when you guys are evaluating different opportunities?
Number one, it's the founders, people that understand Bitcoin intuitively and know what the market wants. So in the mining space, like very excited about this merger between Cathedra and Kungsleden, because rack space is scarce and it's going to be in demand, and we know the founder very well, and we know that he knows what he's doing. And continuing to back the winners that are in our portfolio. They're doing really well, creating infrastructure, whether that's exchange infrastructure, custody infrastructure, collaborative custody infrastructure, financial product infrastructure, analytics infrastructure. Keep supporting those companies. And then one thing, I mean, I won't speak for the whole team, but for me personally, like I think we're still on the front end of the order of operations on the road towards Bitcoin success. So the things that really get me excited are pretty boring to most people. So it's like building robust financial products on top of Bitcoin, leveraging something like multi-sig. It's enabling payments that are cheaper, faster, more private. And
well, when you just mentioned that, it reminds me of so we're here in Houston. Tonight's a Houston meetup, Bitcoin meetup, and Austin from Sonoda is going to be presenting. And like you think about this really unique service and software kind of like middle layer that he's kind of created and has been working on. It's a really powerful tool, because in theory, like currently what I'll have to do, everything is very manual right now as like a hosting provider. You know, we have to set up our billing in such a way where, you know, we manually bill usage to our customers. They have to coordinate payment, whether it's in Bitcoin, USDT, or wire. and then we then have to turn around and then wire that money like by the beginning of the month to prepay for our next month. So there's just like dance every month, and I'm just, you know, I mean, I literally just say a prayer every time. I'm like, oh, thank the Lord that I got this done, you know, because all it takes is one bad month, you know, or somebody be like, oh, sorry, I can't, or whatever, and then you know you gotta scramble, and like what his software does, he takes my pain away because it's essentially like the streaming revenue comes directly through that platform, and then it can get split to go directly to the end customer or the end provider, which would be the utility or the power producer. So they're happy. They're not worrying about any kind of crazy counterparty risk because, like, you know, we're a big bill for them at the end of the month. They just can get it directly streamed to them on a daily basis or some type of settlement where it's almost consistent. And then I then, as a, you know, this guy in the middle, can then make a very strategic decision on my side saying, well, maybe I only want X amount of margin in USD, and maybe I want to just keep the rest in BTC. And now I become like, it's almost like it allows me to synthetically stack, you know, through that. So those are like the type of, I would say like innovations where it gives Bitcoin mining like a cheat code. So yeah, it's pretty powerful.
Most people only talk about Sonoda from the collateral standpoint and what it does for that, but that's I haven't thought about it like that.
Well, yeah, because a typical Sonoda user, I want to say typical, but like usually when you think of like a Bitcoin mining operation, it's a prop miner who has a relationship with the, you know, utility or whatever. So there's really only two, but we're in the middle. But like we're the one who has the relationship with the utility, and we're the one who has the relationship with the miner on the other side. So you know, for us, it just gives us optionality on how we want to, you know, run our business.
So are you guys using Sonoda?
Not currently, but it would be, you know, it's a very compelling piece of software. And as companies start to scale, they're going to look for solutions like that, because that is a solution that solves a problem. And like you mentioned, on the deposit side or the collateral side, that is a problem on the producer side or the energy producer side, because like, they don't want to manage all that amount of money. There's like, you know, some issues with that. So for them, they would much rather have that as a, you know, kind of a scenario
settled every day.
Yeah.
And I agree. And I think Austin's going to kill it. I think that, I mean, I can't say who, but I've worked with a lot of miners over the last couple of years, and man, like the growth of the conversation surrounding Austin and even the utility level folks, like some of the Oklahoma utilities, like calling me just to ask about that and how it works, and I'm like, you can call Austin; he'll talk to anybody. So I don't, you know, you don't have to call me, but I think that it's going to become. Probably a commonplace thing.
Yeah, it's a great example of it. Like, we're still so early. Again, we're still on the front end of the order of operations of Bitcoin's long-term success. Like, a lot of people will see the meme that like, oh, the Web 3.0 stuff that was happening on Ethereum and Solana last cycle, it's coming to Bitcoin. It certainly is in a way, but I don't think that's where the signal is. I think it's still at the lower levels, like energy and mining intersecting and becoming tightly connected with each other. There's still a lot of room for that relationship to grow, and there's still a lot that needs to be done there on the infrastructure side, the software side, the firmware side, the mining. Last cycle with FTX, BlockFi, Celsius, Genesis, like really proved that like if you don't know how to custody Bitcoin, you don't understand Bitcoin, the asset that doesn't have a lender of last resort, like you're not going to have a sustainable business. So I think this cycle, companies who already understood that or learned that lesson last cycle will begin providing more financial services that really respect Bitcoin, the asset, how to custody it, how to create a financial product that interacts with an end consumer and in a way that makes sure that they don't lose their Bitcoin at the end of the day. Custody, whether it's hardware or these collaborative custody models, there's a lot to go in that direction, especially as all these corporate treasuries. I think the ETFs have been great for the price, but I think the weak spot is that they're all custodying their Bitcoin with Coinbase outside of two. And is
that the biggest vulnerability?
I don't think for Bitcoin. I think just for,
but for another like event where all this shit falls apart, and you know we have another like an FTX. What would be the thing that's out there right now still that would be the biggest threat to like a major pullback?
So I wouldn't say that Coinbase is taking customer Bitcoin and doing what FTX was. I think they do historically. I mean, they acquired Zappo, which was the like alongside BitGo was the like gold standard of Bitcoin custody. So I think they custody it well. Like I just think it creates a cruise missile risk where you have millions of Bitcoin with one custodian. If a government goes to them and holds a gun to their head and says, you got to give us that Bitcoin or you can't give this Bitcoin to one of your users, they're gonna abide by that diktat. And so I think, again, that lesson still needs to be internalized for many people in the industry. And Bitcoin, again, I've been beating the drum and saying it incessantly because I think that will be the standard moving forward. And there's companies building the standard is multi-sig quorums that split the key up between different actors, where you have a company like Unchained, you have a mining company that holds a key, and then a impartial third party that holds a key. And that creates a much more risk-averse scenario for Bitcoin custody. And it's very boring and it's very technical, but it's the thing that excites me because you can literally create a more robust and sound financial system on top of that.
Right. Because you have like that's what we would call like a low time preference view. Because like right now you're like, okay, it's 70, like, you know, even with the current price, you can still see the value of that. But what you're kind of looking at is like, what will it be in the future? And like, we have to start building for that stuff now, because, you know, if you ever get to some of these like insane God numbers of like $1 million of Bitcoin, can you imagine the conversations people are going to have because they've got a couple Bitcoin?
I won't have any conversation.
I'll be
on the beach somewhere.
If Bitcoin goes to what would like mid six figures, they'll have trillions of dollars on their management, which is insane to think of.
That's crazy to think about.
So that's why, you know, you can call it boring, but it's just kind of that's your ability to kind of see into the future a little bit more.
Yeah. Don't what's the old adage
where abyss?
Well, what's the adage where it's like you should have your self custody set up prepared for, you know, price 10x from now. But I mean, I think maybe one other risk too is less the maybe custody best practices, but more you alluded to, where the regulatory attack on sort of the ETFs, where it's like, okay, now you have like a perfectly clean way to access your Bitcoin through your Charles Schwab. What's wrong with that? And so I think that probably is going to be and I'm not sure if it's more like it's a price action thing. You know, I think a lot of times these sort of things can, these multiple truths can remain and be in tension with each other, where it's like Bitcoin number could be going way up, and government says, fine, why would you ever need to hold a private key? Why would you ever need a self custody? You have this perfectly good way of doing it through these ETFs, and I think that's probably like the next attack. And I think also, or that's probably the attack that scares me most, I should say. I'm not sure if it's next. Who knows? Maybe we'll get some competent politicians for once in our lives. But I think
doubtful.
I think like, you know, that I think is one clear like line in the sand, where if there's ever an attack where it's like it's illegal to hold a private key as a private citizen, that certainly should be like a pretty clear line.
Man, if we get there, we got some big problems.
Yeah, if it gets to that point, that's when it's like, all right.
I'm getting in my zombie apocalypse.
No, you're not. You're not taking my keys, U.S. government.
This would be a lead into the conspiracy theory talk, but it goes back to like we were talking about, like at some level, states have to stand up to the federal government, which includes individuals have to stand up to the federal government and just tell them no.
Yeah, and actually, again, going back to the earlier part of the conversation, like I forget where I was saying this, but if you think about it, like the path of least resistance for a government that is in the middle of a sovereign debt spiral is just let it flourish.
Right.
Because let people access their own Bitcoin. And like, yes, they may say you can access Bitcoin via Charles Schwab. Like you can only do that. But again, that's the asset. The network side is enabling these use cases that are literally impossible unless you have Bitcoin and are like interacting with the network at the protocol and layers above it. Like you need it to access some services like Sonoda. Like you need Bitcoin to do that. You can't do that via an ETF share.
Right.
So like it has this fundamental utility that can only be leveraged if you actually hold Bitcoin. And that utility is, I think, a step function improvement on the incumbent system that's going to be obvious to the market, where people demand that they have access to private keys. And then on top of that, again, people are feeling inflation now. We're in a debt crisis, whether people want to recognize it or not. It seems like the Fed's going to lower rates. They haven't solved inflation. The TikTok videos that you see of people complaining about inflation, not only here, but all over the world, people know that something's wrong. And I just find it I find it very hard to believe. I think they'll try, but I find it hard to believe that they'll be successful in preventing people from accessing Bitcoin, because it will literally be, mathematically, the debt situation is such where they cannot fix it. And
I heard Parker and Will were on with, like, I think Preston Fish the other, like, last week.
Pish.
And they were mentioning that's gonna get cut up. That'll get clipped. It's kind of mentioning, like, their critique a little bit of Saylor, kind of going maybe to the extreme of, like, the property kind of element to Bitcoin, right? It's digital gold. And you have these property rights with it. However, in a world where, it becomes more and more balkanized here in the United States, and we have, states' rights starting to become more and more prevalent, that meme of these property rights then is more, I think, like, connectable to some of the, like, it'll be easy to apply that to laws that start getting put in. And I mean, not that there already aren't already.
And the whole property meme that Saylor is running with, I think it's because he's the executive chairman of a very now prominent publicly traded company, has to posture a certain way. But the whole property argument, it's not mutually exclusive. I view my Bitcoin, it's my property, but I also use it as it's money too.
Right.
No, I think you hit the nail on the head, which is right. Like, and this is one of the things too, where we certainly see it in mining all the time. We in group chats talk a great deal about some of the strategic narrative positioning of different companies, and I think that's exactly right. Like, it's Saylor's job to make the U.S. government not think that they maybe need to regulate his business differently, or there's no additional scrutiny needed.
It's not a speculative attack.
These are not the droids you're looking for, like, it is a speculative attack, and it's the most beautiful speculative attack. And I think it's like one of the things too, and I him using convertible debt too. It's like, if Bitcoin goes up, okay, maybe this just converts, and I never need to repay this debt, and it just equitizes. Like,
crazy.
He's playing 4D chess, the prophecy long foretold by Pierre, who when he first wrote Speculative Attack, but
2013.
No, and I think it's but yeah, it's kind of important to sort of be having these conversations now, I think, and I think this is, again, maybe to tying it, not to shill too heavily here, but I think this is one of the things why it's just, like, important, where it's like, all right, what are your core beliefs? Where do you think the world's going to go? How can you have a sustainable business that you can compound capital, acquire rights to power, to Bitcoin, and thinking about all the tools that help us do that. I think it's really, really important, and not getting caught up in sort of games that everyone else is playing, because if you just try to replicate someone else's strategy, oftentimes that goes quite poorly. So.
Yeah, and this is another conspiracy theory question. But first, before I ask you, I want to ask about hedging. Like, has there been? I know Luxor does kind of they have the little hedging option, but like, on the scale, like oil and gas companies type hedging, will that ever happen in your opinion? Will you think we'll get to a level, or?
I think so eventually. I mean, just if it's commodity production, historically these hedging products have come to market, and Luxor has won a market. I've talked to a number of companies that want to bring hash rate derivatives products to market that would be used as hedging devices. But I think right now, where the market is, you're much better off hedging in the futures price market or on the energy side of things.
I think the more infiltration from folks in, like, the oil and gas side or the energy side, the more hedging strategies you'll see. Obviously, a bunch of folks got wrecked last time around, so they've already implemented that at some companies. But I think because it's not a native thing for a lot of, I always consider myself like a caveman Bitcoiner. It's like ooga booga. Like, I know how to do, like, a couple different things, and then when you start adding in all these, kind of like extra, special features and whatnot, it's like, well, that will fit really well into someone who has that, kind of talent stack. So. I think you'll see a lot more of it.
I know you have thoughts on this.
Yeah, I think so. One thing no one's really talking about right now is the fact that I think Luxor is the counterparty for all of these contracts, and all paper settled. So, like, I don't.
You're collecting bodies today, Drew.
I don't know. Hold on.
Wait, you got
shout out. I love the Luxor team. Shout out, Nick.
Caught a little
shout
stray
out
from you earlier today too. So you're like, I love this.
I only
Drew the assassin.
I'm always curious where the fourth phase of immersion comes from. No, but no, I think in general it's like, so right now these are all paper contracts with a single counterparty. I have every reason to believe, Matt Williams, who's running that business over at Luxor, he's a super smart guy from, traditional derivatives and options markets. And I think he's brilliant. So I'm sure.
I do too. I like Matt a lot.
I'm sure he's got great strategies, to build this business and to make sure nothing bad happens. But, I think right now, as a Bitcoin miner, it's like, look, if you really want to hedge, do you want to like keep buying these like short-term 1 month, 2 month, 3 month like paper contracts? Well, most Bitcoin miners are irrationally bullish and they think the market's going to get better. So why do I want to lock in what I think is the bottom as in today? Yeah. So there's that greed issue or not human psychology issue that plays a role here because all Bitcoin miners are irrationally bullish. That's why a lot of them get into Bitcoin mining. I think there's also like transaction costs associated with it. So I think it's something like 2 to 3 points for when you're entering into one of these hedges. There are collateral requirements as well. So there is like real friction there. And I think, oil and gas has like perfected the science of sort of like hedging commodity prices or, and many other physical commodities as well, that, trade out in Chicago. I think we have a long way to go before we get there. Like we've dabbled around and we put on a trade. We actually made some money on the trade, but it's so immaterial that it's not even worth discussing. It certainly doesn't constitute as MMPI. But, I think the easiest way to hedge right now as a miner is just to not get over your skis. Don't buy ASICs with that. And, if you have the right treasury management strategy where you hold some Bitcoin, hold them out you're comfortable with, you have an adequate cash reserve, you're perfectly hedged to weather upside and downside, especially if you have low power price. And I think if the people who really say that they cared most about the hedging are the energy producers. Just getting back to the regulatory piece, if the energy companies really start mining Bitcoin, and this is a point you've made before, that's really some of the best regulatory protection we can get is sort of getting their lobby to kind of go do the work because Bitcoin mining is not big enough to have a real lobby in DC.
Work smart, not hard, Bitcoiners.
Work smart, not hard.
Get the energy lobby.
You heard it here first.
You're right. That's the way to go.
So I think it's natural that maybe at some point they'll want that. But again, the question with these hash rate derivatives is what are you really hedging? Like you can hedge Bitcoin price. And if what you're trying to do is like hedge over just the next month, then you can make some bet around what, network hash rate's going to change to, and maybe hedge with Bitcoin price with futures. But really the other aspect of it too is transaction fees, which is becoming increasingly more volatile. So I think energy companies getting into Bitcoin mining and transaction fee volatility will be the thing that really drives hedging. But there's a reason why this isn't fully adopted yet. And I think it's like a talking point that people love to have similar to Stratum V2, where it's like, oh, well, the hedging market's going to mature and now Bitcoin mining is going to be a totally safe business for all the energy companies to get into. And the reality is that there's like real world friction. There's a reason why these things haven't been adopted. And I think there's reason to believe that they might not even be adopted for another 5-10 years.
No, I agree with it. I'm worried that, oil and gas, you're buying a commodity that like everybody has to have. It's not, and regardless what we believe, everybody would believe that Bitcoin is something that you have to have and should have. But the drive for that product is probably not the same still for, as it is at oil and gas. And so you're just going to struggle to see that long term, like a 6-month contract.
Yeah, it's a liquidity problem. There's no liquidity in that market right now. Yeah. Funnily enough, it probably won't develop until you're settling large international oil trades in Bitcoin. Like,
no,
Saudi though, didn't it? Saudi came out and said they were joining the BRICS stuff, right?
Yeah. But that, I mean, like, point being there is like once it gets to that point where you're settling large international commodities trades in Bitcoin, like you make the assumption that the Bitcoin is monetized to a certain point. There's a relative level of stability, and you're just hedging like small volatile movements within that relative piece of stability.
Which to your point, actually, and this is I don't mean to just totally be a fucking hash rate derivative bear. I think one of the bullish aspects of like maybe these hash rate derivatives, what they really do, if it really is much more about transaction fees than Bitcoin price and network hash rate. Maybe it is just a way to hedge blocks, for block space users. Like if I know I'm going to be sending, using this much block space over the course of the week, or have this many transactions, who knows? Maybe there's a little niche there for some of these hash rate derivatives. But
and to be kind of give like give some like color to Drew's frustration. Like we've been in like Telegram chats with folks who have been pitching and developing these programs since probably late 2020, or actually sometime in 2020. It was like when we first started hearing about it, and it was going to be like the next big thing that would save miners as far as allowing them to grow and things like that. And it's just never really materialized at this point. However, I do think ERCOT presents, because it's its own wheel. What do we want to call it? It's like the Wizard of Oz.
Here comes Tom, the ERCOT bear, man.
I totally. Ryan, what's his name? Priority Power. Nick at Priority Power is just like he rage text messages me because he lurks on all the.
Oh yeah.
And he's just like, you're wrong about this. I've got to show you a graph, and I'm like, dude, I don't care what your spreadsheet jockey stuff says. It's so convoluted. But
now Tom's firing up.
I know. So yes, you know what? Hedging is awesome for a really broken system like ERCOT. Yeah, it's perfect. So there should be an entire industry of ERCOT hedgers association. And they won't exist in any other market.
Shots fired.
Shots fired.
You let us
Nick,
go long
you can be the
enough.
president, buddy.
You let us go long enough, and there'll be no survivors left.
Yeah, exactly. I know. Drew opened the floodgates. I'm like, let's go.
I do have to get in the car, but I don't want to
Okay,
end this.
no. It's good. I know. I've been we're at an hour and a half. So.
Really?
Yeah.
Oh my word.
Yeah. If we had got the Malort out, I was gonna throw in Matt Willis brought some Malort.
Bringing us back to our Chicago days.
Yeah, I know. I figured you guys would want a shot of that.
I mean, Matt, I quite like Matt. Shout out at Trading Onions on Twitter. But I know we've been quite bearish, but maybe also just to inject some positivity then, is I do think we are at an incredibly exciting time where, the landscape's shifting before our feet, thinking from first principles and going and, trying to just build stuff. And always, Tom, was the way you describe it, always be building. Where it's I think this is, we maybe have never been in a more exciting time sort of as humanity in terms of how we can change things moving forward. So I still am quite optimistic. I just think we need to be sober about what's actually going on. And I know there's so much incentive on the conference circuit and all this stuff. Everyone's shilling their bags. Everyone's trying to sort of paint a picture of the world where, their product and their company is super, super important. And, I certainly have that bias myself, but I think we just got to be honest about what's actually happening, what's going on before us. And what do we think of that, and kind of having the courage to kind of move in that direction, even though it may seem different than what other people are doing.
Dude, he says things so cool. I wish I could do that. Good job, man.
It's just he just sees the mustache and just tunes out everything I say.
Man, I'm jealous. Yeah. Well, look, I know you got to run to in, and I wanted to ask too. You probably would have gotten more conspiracy theory stuff, but I don't know why we're not hearing more about BRICS on a national media level, but. I think we all probably know why.
Yeah. Well, and it's happening, but I think they ultimately fail too because they're going to run into the same problems that it's still fiat money. Imagine trusting a basket, an SDR filled with rubles, yuan, Brazilian real, whatever it may be.
The yuan famously with no debt. Famously no debt in that system.
Right.
If you think these countries have, if you think these countries have trust issues with the U.S., which they should, and they do, to think that they're going to be able to trust each other and their shitty currencies in this basket, even if it's commodity backed, Bitcoin is a solution. The BRICS countries should just come to the ultimate conclusion that the problem we're trying to solve is solved with this peer-to-peer distributed network in Bitcoin. It minimizes trust across all counterparties. You don't have to go build a new trust system with the BRICS countries. You just trust the minimized Bitcoin network.
I agree.
Money for enemies.
But with that being said, they're definitely going to go build their own currency and try and do their own thing. And they're going to fail ultimately. If any of the BRICS countries are listening, save yourself some time and just adopt a Bitcoin standard.
Right. That's the easy way.
Yeah.
That's the easy way. Ultimately, I think that'll be just shaking things up a little bit more that will lead ultimately to quicker adoption of Bitcoin overall. Yeah. But just a thought, man. Thank you guys.
Thank you, Justin.
Thank you, Justin.
Super, super dope. Sorry, we didn't talk a ton about Cathedra, but
that's not what we love. Bitcoin mining. We didn't come here to do that. We're not engaging. We're not doing any pay for play here or anything like that. Not to say that doesn't go on with other podcasts in the industry at this point.
Not TFTC.
Definitely not TFTC. We haven't even done a TFTC episode.
That is kind of criminal, actually.
Yeah.
Y'all haven't done one?
Not yet. Not since the announcement.
Oh, okay. Yeah.
So there'll be time.
It's
maybe
only been
when
a couple
the
weeks.
deal gets officially approved, then we'll do a special one.
Yeah, man.
Yeah.
We're gonna do an episode up at Rainbow at the site. And so we're gonna do like we might start doing like some little, I don't know, 5-10 minute like documentaries, whatever.
Yeah.
And go take some shots of sites, things like that. Well, obviously we'll give you a heads up before we do anything like that. Make sure you guys want to be a part of it. But
absolutely.
Figured it'd be fun.
Yeah. We'll have some exciting announcements when it comes to I was able to meet. That's what's awesome about Twitter is like, you have direct like kind of connection with some folks that support the company. So I was able to arrange like an impromptu investor relations meeting for one of our shareholders who was like near one of our sites. And he was like, "Hey, can I come check out one of your sites?" And I was like, "Yeah,
sure.
dude, like let's go for it. Let's see what this is like." And just went through the whole process. We ended up having lunch at a Cracker Barrel after, and like talking about life. And so that was like our first like unofficial investor day. And I think there will be many more. And I think with Rainbow, that would offer like a really unique opportunity for people to see something I think is going to be an awesome story moving forward when it comes to flourishing and abundance in regards to energy and Bitcoin.
Yeah. I mean, also shout out James. I think it's one of the cooler, like crazier aspects of, being involved with the public companies when you like get to know these shareholders who start following you on Twitter and start like, sending you DMs on Twitter.
Yeah.
And they're just like, real people with real families who are just like, I like your company. I think it's gonna go up. But one time someone's like, I put my kid's college fund in Cathedra, and it's like, I think about that a lot when it's like, working on a day-to-day basis. It's like, hey, my boy James, his got, I need to make sure that this company is successful because it's not just, my family and our family and our friends who are, investors and obviously us owning equity as well. But like this affects like real people. And so we really it makes you even more motivated to do right by them.
Yeah. That's super dope. This dude, man.
I think Justin, you give me too much credit.
If we stay here much longer,
hey, we're thinking of starting a podcast.
Oh, really?
Do you think that's a good idea with Drew?
Are you kidding me? Yeah, Drew.
I was always told to have a voice for a newspaper, but
a voice for newspaper or a face for radio.
Yeah,
right?
something like that.
No, of course. I think it's a great idea. You totally should.
Well, I think we have some ideas.
Yeah.
Yeah. No, you guys will kill it. It'll be great. Yeah. Man, thanks for coming. Like and subscribe, please. We haven't really tried to get any sponsors. We need to start doing that, but no. So like and subscribe, so maybe somebody will want to sponsor
this episode. Brought to you by Shiner.
I gotta say that I do want to give a shout out to Uchi. That I was gonna get them to. They were gonna let us film the episode at Uchi and back in the Amikaze room. So
it's funny you say that. I had to leave here to go to Uchi Bar in Austin. I'm going to an Uchi restaurant tonight.
I haven't been to that one. Is that the barbecue?
It's a new one. It's like the bar one they put in downtown.
Oh, okay, yeah. I love Uchi, but so I'm talking to them about.
Marty's got to take his private jet back to Austin.
I know. Yeah,
you rode over my private jet.
70,000.
Smells like a fart. Right now.
Oh, man. All right, guys. Well, thank you. I appreciate it.
Thank you,
good.
Justin.